So California fire insurance has had the spotlight on it for the past couple weeks. Most discussions have centered around how state regulations involving fire insurance has cultivated this environment where insurers don't want to be in the state, thereby decreasing competition and access, raising premiums, and lowering your chance of actually getting insurance at all. But see, fire coverage is not the only insurance industry taking a hit because of California's regulations. The life insurance industry over there has taken a bit of a beating as well. You see, in 2013, California passed anti-lapse statutes which were aimed at protecting their consumer. Statutes put some extraordinary laws on the books that insurers had to comply with in order to do business in that state. The first is that the companies had to give 60-day grace period notices for those who haven't paid their bill. The industry standard for grace period notices is 30 days, so this is twice the amount of time where if people do not pay their bills, they are still extended the full amount of coverage under the death benefit. Also mandates that multiple hard mail notices must be sent out prior to lapse, meaning email and phone won't do. And it puts the burden of unclaimed life insurance on the insurer, meaning they have to go out and find the beneficiary that never claimed the policy. In most states, the burden to claim the benefits is upon the beneficiary themselves. If it goes unclaimed after a certain period of time, they turn over those benefits to the unclaimed property division of that jurisdiction. Now, of course, life insurance premiums are based on health, and California is one of the healthiest states in the union. They have the second highest life expectancy of all 50 states. This should mean cheaper rates, but due to the conditions of the marketplace, California actually has the 5th highest life insurance premiums in all 50 states. This then directly translates to less people being insured. Roughly 12% of Americans don't have life insurance when they pass away. That number is higher in the state of California at over 13%. And you've got the burden of selling in that state placed on the advisors and brokers. In the state of Maryland, it cost me roughly $70 to apply for and renew our company's insurance producer license. In the state of California, the current application fee is $188 plus the cost to get fingerprinted. That's right, you must also send the California Insurance Department your fingerprints, which on its own itself can be a couple $100s. It's not just that these 2013 regulations now apply to future policies being sold in the state. We're now seeing individuals and the state itself successfully filing lawsuit against the biggest insurers in the state for policies issued prior to 2013 that lapsed and did not comply with this new 2013 regulation. So although we can all agree with protecting consumers from being taken advantage of, the problem is too much protection in the form of regulation actually ends up costing them.